Good evening, everyone. This is Rodney with the Triton Wave Market Outlook for Monday, June 10th, 2013. And this is brought to you by Triton Wave Consulting, which are Triton Waves, having early warning market timing indicators in all time frames in all markets. Okay, I'm back again. I was gone for about a week and a half. Took a little break, much needed rest, and I missed this this action right on here. I played a little bit, which is my favorite part on the downside. I didn't do any videos or anything. It's quietly trading. But one of the things I wanted to point out was these. Hang on, let me just move this back in again. All right, what I've been highlighting for the past several weeks, actually going back to oh my goodness, going back to September, is a series of higher highs, and now we have like a balloon high going up here. These are kind of like moderately traveling. These are extensively traveling to the upside. In the meantime, as I've been pointing out to you for months now, the waves on T1 are higher here, lower here, and lower here. So in other words, the representation of, even though these are going straight up like this, and this is really a major balloon area up here, the waves are just comparatively, they're insignificant. So I'm looking for this to come down once again, and we've seen incidents where when the waves first crossed zero down here, it came down like this. When it crossed again down here, it was only very short term. And now we have, with the opening of the trade for Sunday evening, it is now 11 o'clock Central Time. They've just crossed below zero for the first time since the first week of May. So I expect this to come down, at least to test back again the 55 period exponential moving average, which is down around 1600. And right now we are up, we're up two handles on the S&P on the E-mini futures. Let's break this down into a 144 to see what's going on. Okay, so this is a 144 continuous time chart, and that actually, I don't really like that. Let's look at a day only chart. Okay, that looks better. So these are day only. So in other words, they only trade during the no overnight trading in this, but it gives you a different perspective. So this started heading down at the end of May, when I got the original sell signal right in here, and this has been down, basically trending down ever since. So it took T1 down, T2, T3, and T4, and T5 is just hovering above zero. So what am I looking for here? This action right here on Thursday, Friday, this action in here, a lot of it was spurred on by the numbers that everybody was looking for. The oh, actually, hang on. This is a 144-minute chart, so it's the last three hash marks. So this move right in here, and all of this here, was spurred on by the fact that there was the unemployment figures, which were the monster reports everybody was looking for, actually were, they weren't good and they weren't bad, but they were enough for everybody to think that the Fed was going to keep pumping money into the system, or buying treasuries or bonds or whatever it takes at the rate of, I think it's 88 or 90 billion dollars a month, which is really putting us. Well, let me put it this way: it's enough to keep this market moving in an upward direction. So when it was not enough here, they pumped in more money. When it wasn't enough here, they pumped in more money, and they pumped in more money. So we're looking at moving from the stratosphere into the ionosphere, and this is really, really balloon stuff. And just the fact that all these things are moving below zero, I don't like it up here. So there may be, you know, like a short squeeze. There may be. Let me see what a 50% retracement looks like from the very top here. It's 16. It's 1686. We are right in the 6-1. We are right in the 50. In the 50% to 618 retracement between 1641 and 1652. We're right here. So I don't think this has a long threshold. Let's take a look at the 21 and break it down a little bit further. Let's get rid of these here. And this. This is a daily 21. And you can see these are totally playable to the upside because you know when the short squeezes come in, they're really amazing. But you can see when this broke through. Okay, so this was a higher low here, and this was cash was a lower low, or not the cash, but the futures, the actual price. And when this broke to the upside after the higher low, and that's when this took off. So it was good for like about a 30-point move. If we break this down even further and look at a 1597 chart, what are the plays here? Well, you can see. Let me move this out a little bit. Excuse me. Okay, so there are plays here on T1 and T2, right around in this area, at around 1600, and it takes you, if you're following, the shorter waves sometimes play out. If the shorter waves don't play out, you have to move to the longer waves. And as far as the longer waves go, T5 went above zero and didn't go below zero until way up here at 1636. And so it took you up a little bit higher into 1642, and it went also above here and below here, and this is part of a live trading chart. So all of this happened since the market reopened on Sunday when it's down below zero. But there are some nice trades in here. For here, this is again this 1597 chart below zero. Now, the rule of thumb is when this is above zero, you don't want to play the downside because it's not going to happen. It's going to happen. You know, you can play it for 2 or 3 points, but don't look for anything big. So you really want the long side here. From here, you can get that chunk. You don't want to play that. From here, you want this chunk. So that's how that plays out. All right, let's take a look at Apple. I think I have enough data on Apple here. Nope. Let's go to the 987 on Apple. Oh, wait a minute. I think the 987 on Apple comes out a little bit better. Okay, so here's some really, really nice moves on Apple in the 987. All right, so first of all, you have this move right here when it breaks above zero, and you get this move up here. When it breaks below zero, you get this move down here. All right, so we're talking about 40, 42 to 55, and then 55 down to 40, 43. Breaks above, you go above. You can really do this all day long. Comes down here, breaks down. When it gets a little bit iffy, you're gonna get stopped out at a couple points. So then you have to go to the next lower time frame from T1 to T2, and then you can break it down and follow it to here, and then it jets up above zero on T2 and goes from, you get a little bit of heat here at 433, and then it takes you to 443 at the close. Now, as far as a long-term trade on Apple, let's look at the 21-minute, and the 21-minute looks like it's kind of iffy on T5, T4, T3. If this moves around, and makes it to the downside before this recovers to the upside, then Apple is going down in this direction. Boom. All right, so let's expand that a little bit here. So when Apple broke last week, this is like Wednesday or Thursday, I think it was down even, I think this was down even when the market was up very big. Apple was down like 6 or 7 points. So it's coming back up, but it's coming back up into this tremendous amount of resistance, which is a confluence of 1, 2, 3, 4, 5, 6, 7, 8 exponential moving averages. I don't think it's, the odds of this breaking through this area right here are probably like 5%. So I'm looking for Apple to continue its downside move. If we look at a day, let's look at a daily, see if we can get a better picture of it. And if we move this out, we can see that T1, T2, T3 is above zero, T4, the basic trend on Apple is down. If we get this move down below zero, while this is still below zero, not only is it going to take out 397 right here, and I'm not sure the exact time frame on this. You know, if you're playing options, probably good to go out to July, but we could actually see the next exponential moving average right here is, I believe this is the 1597 right in here. Would take us down to 321 on Apple. But first we have to see exactly what happens here. So the expectation was when this came back up, everybody thought that this move to the upside was going to keep following through to 475. That came down again. This is about a 50% retracement from this move. So this is about 50% right here. Okay, then it moved up, and this is about a 50% retracement, and it hit the 89 144 cross, which is right here. And it just completely reversed about 25 points. And then it came, all it did on Friday, it succeeded in moving up to this bundle. After it cracked through the bundle, it came through it again. It came up to the resistance of the 89 exponential moving average, and managed to come right up to where 3 of these exponential moving averages are all conglomerated. So if it comes back up through here, it's definitely going to 454. If it starts moving down again, then it's moving in the direction of 420 right in here. So let's look at one more. Okay, so here's an example of the waves were on gold. This is Goldman Sachs on a daily, and you can see the waves moving above zero right here. Nice play about 425, and riding it all the way up to 455. I think it topped out at 460 before it came back down again. And I was looking at this. I had one great play at 140, and it looked like it was going to keep on going down. I mean, this looked like, like T1, T2, T3 was going down. T4 was still above zero. T5 was still above zero. But this move above zero right here on some May 25th right here. It's a little late to the party right here, but it happened right around 155. This move above zero with T4 and T5 above zero, and we ended up with a 6-point move on 633 move on Friday, almost to, I think these are probably yearly highs. So let's see how far back this goes. This goes back to February of 2011. So now what we want to look for is a 1272 extension of this past move starting with February 15th. And let me get that a little more accurate here. Ding. All right. Okay, so the 127 move is already 165. So this already broke through that. So with any kind of a move to the downside, this could actually hit the 1618 extension up at about 170, 172. I don't know what's keeping it going. T2 is above T5, T4, T3, and T2 is all above. They're all above zero. So something's keeping Goldman going. Not really sure what it is. Let's take a look at TSLA, Tesla. That's a monster move. All right, let's break it down to the 21. See if there are any plays in here. And basically these are all for, if you're a long-term investor, then you're not going to want to do all these. You want to get in and stay, but I don't really believe that there are very many fund managers that hold positions for more than 2 or 3 weeks, even though they say they do. So there's some really interesting plays on the 21 on Tesla, and that would be about May 25th when it broke above zero. Whoops, a little bit sooner. When it broke above zero here, and the price was 90, it really did a straight shot all the way to 120, and that's 116, 115, 160, and that's been about the high. Then it broke down on the 21 cash, broke down about here, and took it down to this level when it broke back above zero. That brought it back to about 95, and you're long since 95, even though you took like a 5-point hit here. This has been above zero and moved back to 101. So this actually still looks all right for now. Let me see if we can see anything more on a shorter term chart, like maybe like a 144 tick chart. If you really like playing, okay, that doesn't look so hot. Let's go to a 610. 610's not so bad. Let me see here. Okay, so on the 610, the best chart, the best, what I'm looking at is right here when it moves below zero right here, and right about 105, and it's like a day, it's like a day and a half move down to 90, and then it moves above right about in here, and according to T4 you are still in it because this never went below zero right here. So you take a little heat, you take a little heat here, you take a little heat here, but you're in it still at 102. Okay, that's all I have. Have a great evening. It's good to get back in the swing of things, and good luck trading. And I will see you at the next update. Again, I am Triton Wave Consulting. I do private consulting for gold traders, or if you want stock analyzed, just email me at tritonwaveguy@gmail.com. My name is Rodney Julian. I would be happy to meet any of your financial needs or analysis. Good night and good luck trading.